The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go, as we say, until the opening bell, and you got markets in positive territory. Talk about shaking off Monday's acceleration. Higher prices across the board. Apple, biggest company in the world, trading higher this morning. Record revenue, record profits. We have the Fed's preferred inflation gauge. That's out this morning as well. We'll jump into all of it, but nonetheless, you got markets higher. NASDAQ 100. Up another 145 points overnight, 0.7% in the positive, 21,765. S&P's up by about 0.4%, up 21 points at 6121. The Dow up 0.2%, 45,143, and you have the Russell up by about 0.1%. You see a little bit of a give back there on some of the volatility around that PCE number. We'll get into that inflation data in a moment. Bitcoin holding up pretty well. 105,350 for Bitcoin. Crude at 72.83. Positive by about 9 pennies this morning. And how about gold, man? 28.59. 28.59. Folks, on Monday it was 27.32. Now you got a rollover on the contract there, but remarkable strength in that gold contract. You take a look at the daily, breaking well above the highs of October 30th. And man, you check this thing out, right? The one thing I found myself thinking about, if you're ever getting an A to B, C to D, it could be one from the run that you had that began in February of last year. You trade up about 800 points in the gold contract. You pull back to about 2,600 or so. That would take you to 3,400 if you do that move again. Don't think it can happen, man. This has been a consolidation in gold. Put it back to the daily, okay? Basically, it's been a consolidation since September 26th, around 2,700. But that's where the dollar was at 100, folks. Okay, so what did gold do? And there it is, September 26th, the dollar's at 100. I mean, I know I'm going big picture right off the bat, but gold breaking all-time highs this morning. And you have to consider that all we've done is gold has just consolidated. That is remarkable strength. Consolidated around 2,700. Meanwhile, we've had the dollar go from 100 to 110. You got dollar strength yet again this morning. Acceleration last night, we're at 108.30 right now on the DXY. You jump over to yields. The 10-year at 109.05. That's going to put your 10-year yield at about 4.52. 4.52. So 10-year yield, 4.52%. The dollar sitting at about 108.30. And even with yields above 4.5, even with the dollar above 108, you've got gold trading at 28.60 this morning. Remarkable strength. We jump over to the VIX. Very little volatility premium in a market that just keeps going higher. 15.31, down another 53 pennies on the VIX this morning. We jump over to Apple. Apple numbers last night. You're going to open up by about $10. That's more than a 4% pop on Apple shares to $247.65. Now you take a look at Apple. You got highs out there of 260. Okay, that's a weekly. You put it back on the daily. We're going to open at about 247. So you're going to be $13 away from the all-time highs for Apple. And let's get into the numbers on Apple before we do some inflation numbers. They expect sales to grow by low to mid single digits. The number they were looking for was about 5%. So pretty much in line. And there's where it said, yeah, sales are going to grow by a percentage in the low to mid single digits, in line with roughly the 5% that analysts had predicting. Wouldn't just a mid-single digits be in line with 5? That's a little bit of a miss. Surprised Apple's doing so well when you break down these numbers. That doesn't mean they needed to sell off. But how about China? China sales dropping 11% to 18.5 billion. Analysts were looking for a gain to 21.6. I don't know how you're an analyst and you miss the fact that you're going to drop by 11% and you're looking for a gain. They are not paying attention, or they're missing something, okay? Sales of the iPhone dropped less than 1% to 69.1 billion. The market was looking for 71, so they missed on the iPhone. They missed dramatically on China. You check out China, okay? Yeah, you're talking about declining numbers in a big way. Percentage of revenue coming from the country is now at below 15%. We were at above 20% as recently as 2023, folks. We just started 2025, right? 20% of their revenue. They're diversifying away from China. Total revenue up 4%, 124 billion in 90 days. Analysts were looking for 124.1. They come in at 124.3. Profits, 240 a share. They beat the estimate at 235. Record highs across the board. Yeah, the services division. That's what's saving this equity right now. All-time record, 26.3 billion, growing 14%. They take a lot of that money to the bottom line. They were looking for 26.1. Services in the second quarter are going to climb by the low single digits. Again, low single. They're looking for 5 across the board. And Mac and iPad lineups performed better than expected. Mac generated sales of almost 9 billion. Imagine that, right? You don't even think of Mac. You do, okay? But imagine that, right? 9 billion in 90 days for the Mac line, which is almost an afterthought when you think about iPhones and services on that company. Revenue from the iPad, 8.09 billion. Market was looking for 7.35. Just remarkable. Yeah. Wearables, 11.8 billion. They have so many Fortune 500 companies built into one equity. You could have wearables. You could have an iPad line. You could have a Mac line. You can have an iPhone line, and you could have a services line, and all those companies would just be mammoths, which is remarkable. Yeah, they released a new watch. I guess Vision Pro counts in there, but you're talking about the watch when you talk about wearables. All right, so you jump over to Apple, you're going to open up about $10 higher. That's a move for Apple, man. 247, you trade up to 248 last night. We're jumping into that level. Let's jump around to some of the other Magnificent Seven. Tesla shares, going to be interesting to see how they trade today. They trade lower on the open yesterday. And yeah, we're going to talk a little Tesla today. I couldn't help it. A couple articles up here. What do we got? Yeah. Check out this one, right? Oh, no, that's not the one I want. This is the one. The EV credits. $2.76 billion is what they made of regulatory credit revenue. There it is. That is Tesla's revenue of regulatory credits, $2.76 billion. That number is at risk with new regulations. It's remarkable. So they're selling less cars. Their moneymaker right now to the tune of almost $3 billion. Look at the ramp up, okay? As other car makers have pulled back their EV aspirations, Tesla's been able to sell those regulatory credits with more demand. They talk about even a company like Rivian only makes about $300 million. Tesla makes $2.76 billion from regulatory credits, and that is at risk. Yeah, and that transfers over to this one. We were talking about it yesterday. Listen, it's not trading off fundamentals, okay? And that's all right. But be aware of the risk. Completely divorced from fundamentals. You better believe that, man. They are selling less cars on a yearly basis. That's not a growth company. And we're going to talk about some of the promises that Elon's making, and it's up to you as an investor to figure out whether you want to ride the momentum or wait it out. We'll talk some of it. We got a lot to talk about, folks. Stay tuned. Be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets in positive territory. We're going to talk a little bit of Tesla right now. Then we'll get into those inflation numbers. So Tesla, can't help but talk about them. We had their earnings a couple days ago. Okay, yeah, Wednesday after the bell. Down to 365 when the AI machines saw the actual numbers. Okay, what's always interesting here is the first move is always the fundamentals, and then there's the nuance. And the nuance was the optimism that Elon says 2026 is going to be an epic year. He's not talking about this year, because then you might hold him accountable. He's talking about next year. Next year is going to be great. Just have a little patience, folks. Just have a little patience. Can't help but throw a little sarcasm in there, okay? Now, you got to read this, right? Okay. So first, the articles are going to be written. And listen, there's nothing wrong, man, okay? The market's always right. That's the other side of this, okay? I'm not saying Tesla's going to tank, but I'm giving you the argument here to have the spikes up on your back, I should say, because you're talking about a fundamental trade that's not there. And there was a fundamental trade there for Tesla at one point, okay? Now, you want to see something, because this is what you got to remember, because right now this equity on that earnings call is trading higher on the premise that Elon's never been bullish of self-driving cars. I challenge that narrative, okay? Check out some of these quotes. Now, listen, this is Reddit. Don't quote me on these, okay? And this is a quote from 3 years ago. So we're not even going to get what Elon's been saying in the last 3 years. But I couldn't even remember. I remembered the 2018 quotes, okay? That by the year 2020, right? Okay, but let's go down the line here just to recalibrate. And this is what's going to be tough. I talked about it yesterday, okay? They're going to get some self-driving cars in Austin in June or something like that. You're going to have to be able to trust these car companies, folks, to jump in these vehicles that don't have steering wheels. When you read a tragic story that a car was involved in an accident that was driven by a robot without a steering wheel. I can't believe he said it back in December of 2015. We're going to end up with complete autonomy in approximately 2 years. Back then, he knew he had to go 2 years out. Couldn't go a year out. The following month, in 2 years, Summon should work anywhere connected by land and not blocked by borders. You're in LA and the car is in New York. 2 years. So he was saying that by January of 18, which is now 7 years ago, that they'd be able to summon a car across the country. Okay? He thinks autonomous driving is a solved problem. That's 9 years ago. Less than 2 years away from complete autonomy. And listen, I'm not a hater, but you got to realize that when you just believe in these things, at least have the spikes up, that this could turn on a dramatic factor, okay? We shift to January of 17, so you go forward a year. At what point will full self-driving capability features noticeably depart from? 3 months, maybe 6 months, definitely. I mean, you know, that was 8 years ago, folks, and he's talking in 3 to 6 months, right? March of 2017, he says you're going to be able to sleep in your Tesla. By 2019, that's 6 years ago that he was telling you you'd be able to fall asleep in your Tesla while it drove. Update on coast-to-coast autopilot demo, still on for the end of 2017. It's just software. It's just a software problem. Any Tesla car, which with HW2, all cars built since will be able to do this. Yeah. He's given 6-month timelines in 2017, and here we are, folks, almost 8 years later. Okay, just throwing some caution into the wind. Okay, in March of 2018, he says, I think by the end of next year. You catching a theme here? Self-driving is going to encompass essentially all models of driving and be at least 100 to 200% safer in person. And listen, when we get there, okay, it is going to be safer, and that's why I keep saying it's going to be these anecdotal stories that drive fear, as is the case nowadays, right? Anecdotal stories exacerbated without context, okay, is going to cause a problem, even though they're probably going to be much safer overall because people don't realize how dangerous roads are overall generally. January 2019, probably towards the end of this year, catching a theme. Then it's up to regulators as saying, like, we're going to be there, we just need regulators, right? Yeah. I mean, I can't even read them all, folks. April of 2020, we see robo-taxis in operation next year. I mean, come on. This is like an SNL skit, okay? December of 2020, I'm extremely confident of achieving full autonomy and releasing it to Tesla customer base next year. January of 21. Full self-driving will work at a safety level well above that of an average driver this year. He starts talking about this year, right? December of 21. It's going to be next year. I don't even have upgrade dates from 2022, folks. So you get the point. Be careful here. The fundamentals are declining. Tesla's selling less vehicles than they were. They're the only company in the Magnificent Seven that's making less money this year than they were next year. And the way I encourage you to trade it is set your stops. Okay? Do not let this thing run against you. The last thing you want to do is buy a meme momentum stock that's not based on reality, because where can that go to? It can go to infinity. If it's not based on reality, what's it matter? Right? This is a $1.3 trillion company that makes electric vehicles, and their sales are going down year over year. Beyond that, it's a story. And yeah, if you're going to follow a story, you know, following it for the richest man in the world that's sitting at the right hand of the president, that's a story that might have some legs, okay? But you're talking about a $1.3 trillion valuation, and what also is in play here is that Elon has diversified himself. Okay, so don't think he's tied to Tesla forever. That'd be a heck of a double top, wouldn't it? I mean, we're back to where we were, folks, 3 years ago. That's all it is. So be careful on that one as the story's getting told again. We just walked you through the lineup of this acceleration. We're walking it through it again. Yeah, they're probably closer right now than they were then, but keep those spikes up. Okay, let's talk a little bit of inflation. 2.8% is the number, in line with expectations, but yeah, 2.8%. That's a big number. So the core PCE, that's what the Fed prefers. You take out food, you take out energy, personal consumption expenditure, 2.8%. That was right in line with expectations. On a monthly basis, core up 0.2%. I wish they'd go by 2 decimal points here, because that can mean such a different number. That can mean 1.6, or it can mean 0.16 or 0.24, right? Nonetheless, inflation's hotter than the market wants right now. And you come in at 2.8, it comes in line with expectations. But yeah, we want that number, and I say we, the market, Chairman Powell, he wants that number back to 2%. He's reiterated it, and we'll see where we go from there. All right, folks, we got Apple shares up by $10 on the open right now. You got Amazon shares. They're going to open by about $2 higher. Microsoft shares, how about a $5 pop up to $4.19 from $4.15 to the close yesterday? And Tesla shares trading flat at $400. We're coming back for the open, folks. Stay tuned.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got market final trading day of January, and we may get some tariffs over the weekend, right? Just taking that one off. Yeah, we were bumping up against the higher range. Just putting, this bar we had, the rip lower from Monday, that was quite a volume day, and we're now above that. We're filling the gap, but be careful. That gap, what's the low there? 61.22. We're 2 points above that. So we fill the gap from where we were Sunday to Monday. and we'll see how we trade. You got highs out there of about 61.63. You got 61.62, the high of Friday, 61.63, the high of December 16th, and the market within about 20 to 30 points of that price level right now. NASDAQ 100, 21,790. Highs out there of 22,450. And similar action, right? Bumping up. We did over 1 million contracts on Monday in the NASDAQ 100, and we're just above that price level. And you got lows out there of 21,844 is where you fill the gap from Friday to Monday action. So keep your eye on those price levels, critical levels, as we're filling the gap from Monday. And man, you know, my dad used to say, what's the market's job? To take the most amount of people, most amount of money from the most amount of people in the least amount of time. Boy, you talk about what a head fake it would be if you get back the entire rip lower on Monday, and then boom, maybe the fun begins next week. And the reason why I say it is tariffs are in play over the weekend. You better believe we got some risks out there as Mexico, Canada, China, everything's on the table. We'll see where we go. Let's jump around, see how Apple opens on their numbers. Up by about $8.40. Decent move, up by 3.3%. We jump around to some of the other Magnificent Seven. Amazon creeping higher, near all-time highs, up another 1.6%. Google shares catch a lift as well, up 0.7% right now. Microsoft shares up a percentage point. Tesla up by 1.2%. We jump over to NVIDIA shares, down about 0.5%. I believe Intel had their numbers last night, correct? Let's jump around. Yeah, they did. Almost flat. You trade up to almost 21. You're back to $20 for Intel shares so far this morning. Tesla, a little bit of a lift, up by 1%. And yeah, jumping around some other equities. So Beazer Homes out with their numbers, trading lower. Okay. Missed expectations. Earnings, 10 cents. They were looking for 31. Revenue comes in bigger than expected at $469 million versus $464. And I remember my dad talking about these builders, man. You know, you want to see how things can change in terms of how you manage things during a crisis. This is what Beazer Homes looked like during the financial crisis, the lead up to it and the collapse, from $4.10 to $1. Okay, now yeah, you're trading at 25, not bad. You were as low as $5 during the COVID pullback. You were at 10. Now we're pulling back to 25, okay? But look at this long-term chart, right? I remember him talking about these different companies and whether they just literally cut everything. And if you cut everything during the financial crisis, you had the ability to almost buy it back. And I forget exactly what companies did it well, but boy, you're going to see it on the charts. We'll just jump through. So Beazer, you're down by 12%. Okay, costs are going up. They're not making as much money, even though they had revenue of almost $469 million, which was $5 million more than the market was looking for. Meanwhile, earnings was supposed to be 31 cents, okay, and they come in at 10 cents. And my guess is that they are really struggling and that they probably did everything they could on an accounting basis to make sure they didn't go into the red, right? They come in at 10, probably the most respectable area they could. And this is where, think about the game theory that goes into this, okay? Because I was looking at this number. They didn't make single-digit pennies. They made 10, okay? Much better than making 7 cents a share when you're supposed to make 31. Much better than losing money. And you can play some accounting games, as we all know, okay? Now, we saw what the longer-term chart looks like, okay? But check out other builders here, like Lennar. Look at this one, right? Lennar goes from 65 down to $2 or $3, and you're trading well above at 133. D.R. Horton, you can't even practically see the blip. There's the financial crisis, right? Up to 30, down to 16, to 223. What were some of the others? Lennar, D.R. Horton. Did I do D.R. Horton? Yeah. Yeah, look at that one, man. So, Beazer, yeah, these home builders, man, you know, China, you put it on a daily. This thing caught a bid on their last earnings, and they give it all back. Look at that, man. Yeah, be careful on that one, because my guess is that they did everything they could to get to 10 pennies when they were supposed to make 31. They're taking in more revenue, and they got a cost problem, bringing it down to the bottom line. All right, other equities moving. How about Walgreens? You like dividends? Well, you're not going to like them anymore. Walgreens Boots. Yeah, they're not giving out their dividend anymore. It's in the midst of a long-term turnaround effort. Let's put it on a daily. We're going to come back down and test these lows of $8, man. It's going to suspend its quarterly cash dividend. Now, folks, if you're in an equity that looks like this, you better believe that the dividend is at risk. When you trade from $85 on a straight trip down to $9, and really it's been a straight trip from $57 in April of 2021. That's quite a chart. All right, let's see what else. Yeah, we talked about Tesla, talked about Elon. And yeah, this one shouldn't be too surprising, right? If you believe China on the face, and that's, China says they spent $5 million to create it. They didn't stay. I don't believe that, okay? It's probably somewhere in between the truth, right? They definitely innovated through engineering, overcame obstacles, which put in question the rapid spending that we have across the board. But yeah, of course NVIDIA is going to say that, and they may not be at fault, right? Singapore, 1 out of $5 that NVIDIA takes in is from Singapore. And you're not telling me that China's doing everything they can to get the best technology ever? Of course they are, okay? Yeah. So officials are probing whether DeepSeek bought advanced NVIDIA. If I had to make a wager one way or the other, which way would you bet? There's no way I would touch the side of that action that said that China is not trying to get the best chips and might have gotten their hands on some of the H100s. There's no way I'd take that side of the action. Who's taking that side of the action? Let's get a quote in the den, right? In the YouTube den. Who wants that side of the equation that says China is not in possession of chips that go against U.S. restrictions? Yeah. So that's going to take some time to play out. But that is why I don't see a huge hole in the whole premise of data and spending and so forth, right? So Intel on their numbers a little bit lower today. We jump back to Apple on their numbers. A little bit of a pullback, but still up by 2.8%. Remember, those are, this is a huge number for Apple. Declining China revenue, probably okay. Diversifying yourself away from China in the face of where the future goes, probably okay in the longer term, especially if you're growing that services revenue, and they're growing their revenue, low to mid-single digits, pretty much in line. There's a lift for Amazon again, 238.27. We check out crude, 72.47. And come on back, folks. We're going to talk some golds. Up another $5 today at 28.51. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets continuing to climb. We got the NASDAQ 100 up almost 0.9%, up 184 points right now. S&P's up by 27 points right now. Dow up by about 0.2%, 80 points in the green, and the Russell up by 3. Yeah, Bitcoin just hanging out at 105,000 right now. Crude sitting at a very reasonable $72.51. And how about that gold contract, man? Gold, $28.51. We make $28.59 last night. And, they're talking about it in the den, of course. And, our man Steve Rhodes, he's been all over. Gold priced in various currencies. Not surprising that gold's at a record territory in almost every currency out there. When, if it's in a record territory priced in dollar, which is remarkably strong, then what is it going to be doing priced in currencies that are remarkably weak, right? Through the roof. So that's why, man, if you ever get a reverberation, and I don't think you might get a pullback down to 100, okay? But currencies tend to trend. And we're chopping around at this level after trading higher. The 108 level is critical. Okay, not a coincidence. That's where we traded to in late 2023. That's where we got up to almost. We got to a high of, 106.49 in early 24. We got up to exactly 108 in November of last year, and we just been chopping around at that level. So keep your eye on that gold contract, man, because, yeah, I think everything is lined up. And like I was talking about, if you're looking at A to B, C to Ds, I think we got one forming, man. And we'll find out, We'll see if this has legs. We'll see how the dollar moves. We'll see what happens with tariffs and how that's going to impact the market. But just looking at what that move would take you up to, talking about 33.50, right? If you lengthen that out, we have the move. It's an $800 move from about 2,000 to 2,800. You pull back to about 2,600 or so, and that would power us almost to 3,400. So we'll see how we break out. And yeah, it's going to be an important one this weekend when it comes to tariffs and, reality meeting rhetoric, as we say, right? We talked about it. Trump on day one said 25% they're thinking about. What do you say? February 1st, February 2nd, whatever he said this weekend. And so we find out. We'll go from there. Tesla with a lift. Say, you want to trade this equity, keep your stops tight, folks, okay? There's no reason to risk $10 on this equity. You're going to get plenty of opportunities. Even when I'm giving you a bear case here, don't let it run. There's just too many opportunities, and it's going to be there, okay? Elon's talking about 2026, and I'm not harping on it, but you see these moves, okay? You say, he's bearish and pops $12. He's talking about next year is going to be an epic year. There's going to be extreme volatility. We talked about regulatory credits might go away. They're selling less cars. You're going to have a period of extreme volatility until, to use that phrase again, reality becomes rhetoric, right? until self-driving actually becomes something that's prevalent and mainstream, especially for Tesla, it's always going to be a story with the numbers that are promised to back it up in the future. Yeah, jumping around to the FedWatch tool, you go out to the next meeting. Pretty remarkable. They think there's a 1 out of 5 chance we get a cut in March. I don't buy that at all. Okay? Don't buy that at all. PCE just came out, 2.8%. I don't buy it at all. You go out to May, and you're telling me there's a 40% chance we got a cut by May? They don't need to cut right now, folks. I just don't see it happening. Higher for longer. So even be careful there. If that's what the market's pricing in, there's room for rates to go up right now if they're not cutting by May, because the market's pricing in almost 25 basis points by May. Now, you got to find the meeting where they actually do, and the meeting is June. That's when the market says that there's a preponderance of the probability that they're going to be cutting by 25 basis points by June. If they ever cut by 50 basis points by June, which there's a 1 out of 5 chance right now, the economy is in big trouble. We don't want that to happen. The only way that they cut by 50 basis points over the next 5 months is that there is extreme weakness in the lag that catches up, which you do not want to happen. But in my opinion, man, I think the market's ahead of itself for the next 2 meetings even. You're talking about 18%? No way. Right now, you look at the odds. I would rather risk $82 to make 18 on the idea that they're going to stay put in March than risk 18 to make 82 that they're going to cut, because I don't think there's an 18% chance that they're going to cut by March. And that's the way you want to look at propositions like that, because those are the odds. You're willing to risk 82 to make 18, or you're risking 18 to make 82. And that's just on this one, but it translates to other areas of the market, obviously. Jumping around to some other equities. Whew, Intel. Yeah, the tough turnaround continues. We jump around to some retail. Let's take a look. Walmart. Talk about strong like bull. Man, look at this run. 100% from where you were at the beginning of last year. Walmart. Look at that run, man. Look at the way you break above these recent highs. I'm not going to tell any Sam stories today. You know my affinity for Sam's. Hey, It's why Bezos started Amazon, right? In terms of books, he could sell the same exact product for cheaper. He knew that books, in particular, nobody cared where you bought it, what it looked like. People wanted a book. They went out, they got it. Walmart is in a similar area, right? The staples of your life. That's what they excel at, and boy, they are cheaper than everybody by a preponderance. Even Amazon, who I love tremendously, even Amazon. Target shares, a little bit of a different story, down to 120 on their last numbers. Looking to maybe close that gap. We're at 139.68, slightly lower today. We jump over to TJX. Yeah, this thing's been a rocket ship, man. Look at this chart, right? Talk about a darling of retail. That's your monthly. We back it up on a weekly. There's no weakness in this stock at all. You're in a nice defined channel, man. All right, somewhere on there on the bottom side. And you can make a similar line on the top. Here, let's just duplicate that and throw it right up there. Look at that on TJ Maxx, man. Whew. That is an equity. You want to see the inverse of that chart? Pull up Kohl's. I know. But yes, be careful of Kohl's, man. And you know what's amazing is, I always say it, trust yourself a little bit, folks. TJ Maxx has Marshalls, okay? Let's go to, which I love. Big fan of Marshalls. Haven't been in them recently, okay? But big fan of Marshalls. Do they list them right here? No? Marmax, Home Goods, TJX. Framingham, Massachusetts. I didn't even know that. No wonder I like them. Good old Framingham. Yeah, nonetheless, they got great products. They have great brands. They have great deals. You go into a store like Kohl's, folks. We got Kohl's right near me. We go in there sometimes. Kohl's, I feel like I'm going in a store that feels like it's a bargain store, yet it's priced like it's a Macy's. That doesn't work. They got to figure it out. They got Nike products in there. They're great. They're priced like a Dick's Sporting Goods. Expensive. Not happening. We'll talk about Dick's Sporting Goods. We'll take a look at them when we get back, Dick's. Look at that chart. 242. Be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and I'm not sure what's happening with Dick's. Maybe they heard us talking about it, man. Dick's down by 3.25%. Look at that drop off from the opening bell, right? We come in at $2.50, boom, $10, just like that. I don't see any news. If anybody's got it in the den, help me out. Now, I love Dick's. They've got a good brand, right? And they have great products that are a little bit on the high end. That's the way I can perceive them as a retailer, okay, which is okay, because I look to Kohl's for discounts and I'm paying premium prices. I don't look to Dick's Sporting Goods for discounts, okay? The one thing I'm going to say, though, is be careful of these lofty valuations. Come on, catch up chart. There it goes. Now, look at the way this thing moves. You have the COVID pullback down to $17. You drive up to $150. You pull back to $61. You change $150 again. One more pullback. We drive higher. We're now in another area of consolidation. Okay. What I am going to stress, though, is look at the volume numbers. This is a monthly. Okay. And the volume spikes revolve around earnings usually. Right. You look at this spike back in August of 23. You look at the spike that we had when we traded higher in March of 24. Let's put it on a weekly so you can see these spikes in particular. From a trade lower, you fast forward, we get another spike on their earnings, another spike in the earnings of March of 24, another spike when they trade higher in May. Okay. There's a pullback. But what's interesting here is, on a volume basis, okay, look at this trickle higher. Even last week, because we're at the end of this week, that's a dramatic move higher that really didn't have the volume. Right? You're talking about, you're comparing it to the volume bar when we pulled lower of 8.4 million shares. You trade higher last week on 5.4 million shares. So be careful on a short-term basis on Dick's Sporting Goods, because, yeah, that's a lot of optimism. $20 billion company. And, yeah, Costco, they're right in line with Walmart. Not exactly the same, but they're a behemoth. If they had a place, Costco a little bit closer, I'd probably be talking to them just like Sam's. Folks, thanks so much. Stay tuned, okay? Now, Basil's out today. We got a replay. We got live programming after that, folks. Stay tuned, and have a great weekend, folks. We'll see you on Monday. Thanks so much.